Here we are, my friends, with one of our favorite mortgage brokers in all of Canada, Mr. Dion Begg. How you doing, my man?
Hey, Gary, I'm great, man. How you doing?
I am doing excellent. This marks this video, which is going to be a lot different from the ones we've done in the past, but this marks a pretty big momentous occasion in our video world, Dion.
That's right. I sat down, and I'm a mortgage broker, so I sat down and did some math, Gary, and we've actually been doing this now for just on a year. So congratulations. We've spoken a lot. We've expelled a lot of hot air on this program, I'm sure. But we've reached that 1 year milestone. So I'm pretty happy that you were able to keep me on track and vice versa. And share some really good conversations over the last year or so.
Exactly. A lot of vice versa. Yes, indeed. And Dino and I was thinking earlier, you and I have been doing, workshops and seminars together for 7, 8. We should do the math. It might
be a decade. Yeah.
Years. Yeah, that's where I was headed. And a lot of that, we do it because of our love for helping clients. And today's video is going to be somewhat different. You and I usually banter about what's going on in the market and talk about how mortgage products are affecting, borrowers, and of course how real estate prices and little local economies are affecting people's buying decisions and selling decisions. Well,
yes.
In today's video, we're going to do something that we've been talking about doing for a while now, and I think it's one that's really, really, really important, and that's all about the topic of reverse mortgages. And so what we're going to do here, instead of us bantering about, I'm going to interview Dion in a sense on the myths or the pros and cons of a reverse mortgage. Of course, what is a reverse mortgage? Who should be looking at them, perhaps who should be walking away from them, and really educating. And that's our goal here, as always, to educate our viewers. And you might be in a position to look at a reverse mortgage yourself, or perhaps your parents, Dion, are looking at a reverse.
Yeah, well, this is exactly it, Gary, because, I joke, it may be because you and I are getting older, but this is a topic that's coming up more and more from our clients, as well as some of my clients who are seniors or clients who are in their 40s and 50s and now having to sort of take responsibility for their parents' financial situation as they age, right? And so it may just be a sign of us getting older, but also I really do think it's a changing of the times with people living longer and some of the economics around it. So I'm really excited to jump in and share this with you. But before I jump into the reverse mortgage component of today's conversation, I'd like to just talk about mortgages and just debt in general, so it can kind of set the scene for what we're about to talk about. So in the world of lending, in the world of mortgages, world of real estate, Gary, you often hear these terms of bad debt, good debt, right? And I think just so everybody gets clear on this, bad debt is that impulse buy of that pair of shoes that you really don't need, but you're going to buy it anyway. You're going to probably wear them once. You're going to put it on your credit card and you're going to regret it, but you're going to do it anyway, right? That's the bad type of bad debt. The good debt that you and I, have been working with for so many years now is that debt that allows you to fulfill some sort of life goals, help you build wealth, help you build a home for your family. And usually it means that we're going to be usually it means we're going to be, sorry, Gary, I'm sorry, bro. I gotta deal with this. Holy crap. I didn't know how long we were on this call. Could you just pause?
Resume, and it's on you at any time.
Okay. So before we dive into the reverse mortgage discussion today, I'd just like to talk about mortgages and debt in general, just so we can kind of set the scene. So, in our world, Gary, we talk about bad debt and good debt. That bad debt is that type of debt where you see a pair of shoes for sale, you buy it, you're probably going to wear them once and put them in the back of your closet, never see them again, and you're going to put that on your credit card. That's bad debt, right? Good debt is generally debt that really does help you fulfill your life goals, and generally helps you make money or grow your wealth in some way. So taking on a mortgage for buying your family home or buying an investment property that's going to be, worth hundreds of thousands or millions of dollars more for you and your family in the future, that makes a lot of sense. So, bad debt and good debt, I think most people are clear on that. I want to also talk about this idea of best debt. Okay. And I don't think I've heard this elsewhere, but it's been something I've been thinking about for a while. And in my humble opinion, best debt is actually zero debt. right? It's the best type of debt you can have, no debt. And in a perfect world, we wouldn't, none of us would have any debt. The challenge there, though, is how do you have zero debt and still live the lifestyle you want, still fulfill your goals in life? And I think the best way to talk about debt is really a good example is to use a vehicle like a car. Okay, so let's just talk about that for a second. I know you've got a couple of cars, I've got a couple of cars. And the question there is, do we really need these vehicles? And do we need the types of vehicles that we have? Maybe we should be driving Ferraris or Land Rovers or Honda Civics. Like they're all cars, they're all vehicles, right? And the next question would then be, well, do we even need a vehicle, right? So some people might make an argument that you don't need one. You could walk, you could ride a bike, you could catch public transport, you could take a Uber, take a taxi. All of those things are possible realities, and we know people who, because of their economic situation, they don't own a car. But we could choose, Gary. You and I could choose not to own a car, and we would live a life, but maybe it wouldn't be as convenient. We wouldn't get to things as quickly as possible. It might limit our lifestyle, the things we could do with our kids, the things we could do for vacation. And so I kind of see debt in the same way. And what I mean by that is you don't necessarily need debt. But if debt, like a car, but debt is a vehicle which helps you get to your destination, whatever that is, a faster way. And if used responsibly, it makes sense in certain circumstances. And in my brokerage, when we are helping people take on debt, we're very much focused on how is this going to help you achieve what the thing that you are trying to achieve as cost efficiently as possible. Is going to get you there faster, better, and more comfortable, right? And so all this to say, reverse mortgages still fall under that umbrella of, are we putting you into a product that is going to help you achieve your goal? And it may not be the product for you. Maybe you need the Honda Civic and you're driving a Range Rover, right? You don't necessarily need the Range Rover, or vice versa. And so a lot of today's conversation, Gary, is I just want to put that frame around it.
Yeah, I appreciate that. And it helps, I think, not only me, but perhaps our viewers put everything in perspective. Debt has, and people have all different types of relationships with debt as well. And that's, one of our goals here as well, to help, shed that light or peel the onion away on how best to utilize mortgage and debt and variations of it. So let's dive into reverse mortgages and kind of give us that review really of what a reverse mortgage is. Let's start there.
Yeah, sure. So let's start with the basics. So, what exactly is a reverse mortgage? So, it's a type of loan. It's only available for people aged 55 or older traditionally. And what it does, it allows them to convert the equity in their home into cash. Generally speaking, you can take anywhere from 15% of the value of your home up to 55% of the value of your home, depending on your age, as well as the location of your property. It can also be used to purchase property, and we can talk about that a little later. But the really big difference between a reverse mortgage and a traditional mortgage is the fact that there are no payments from the borrower to the lender. Okay, that's the real key reason why, especially Canadian seniors, are using this type of product. And I want to be clear here. The way that you repay this loan is basically when you sell the home, okay, or when you might move out. You might move out to live with family, or move into an aged care facility, or when you ultimately pass away. So these are the ways in which the loan is ultimately repaid. I also just want to say this: there's this big misconception that when you take a reverse mortgage, that the bank owns your home. Okay, that is not true. That is a widely misunderstood myth. In fact, a reverse mortgage in the way that you own the property will remain similar to the way you would own your property with any major Canadian bank. Your name is on title first. The lender is on the title second. You very much maintain control of that asset.
Yeah, that's good. And I know a lot of the questions that we have are questions that you received in the past, questions that I've
Correct.
asked. And that is a huge misconception. So we will do the myth busting along the way here. And you kind of shed a little bit of light on this, but I would like to get some clarity on it as well. Is how does a reverse mortgage differ from your typical mortgage that a lot of us are accustomed to?
Okay, so it's called reverse because it works kind of reverse to a regular traditional mortgage. Number one, you are not paying the lender. The lender is paying you. Okay, and the way that they can pay you is lump sum or a monthly drip. And just to be clear, this is not free money. Okay, there is still interest charged, but instead of you paying that to the lender on a monthly basis, it is simply added to the loan that you owe. Meaning, when you start the year, you might owe $100,000 to the lender. And over that year, you accumulate, say, $7,000 in interest. So you will end the year owing $107,000 to the lender. So it's reverse in that a regular mortgage gets paid down, a reverse mortgage grows.
Rose. And I know we have a chart on that later on in the video, so stay
Yep.
tuned to that. So for those that are
Yeah.
visual learners, you'll see that there. So let me understand this correctly. And what I just heard as well, you don't have to make payments on it,
Right.
but you're allowed to make payments on that mortgage. And I also want to tie this in too, because you mentioned it, Dion. You can receive a lump sum as well as you said drip, but you can also receive monthly payments from it, right?
Correct, correct. Yep. So there's a lot there to unpack. So, firstly, you are not obliged to make payments, okay? But you can choose to make payments if you wish, okay? So let me give you an example. We have some clients coming up for renewal with their traditional mortgage, but it's coinciding with their retirement. Therefore, their income in the household is dropping. And as you know, Gary, right now, when people are coming up for retirement, they're unfortunately jumping from interest rates of say 2 or 3% up to interest rates of close to 5% plus. And so it's all sort of coming together at a bad time for some seniors in Canada. They say to me, Dion, we can afford a payment of $1,500 a month. But with the new scenario with our traditional bank, we're going to have to be paying something like $2,500 a month, and we just simply can't afford the extra $1,000 a month. So that couple can actually choose to continue to pay just the $1,500, so they can take a reverse mortgage. The reverse mortgage doesn't oblige them to make any payments, but if they want to make a $1,500 payment per month, they can. Okay. And by doing so, what happens is at the end of the year, because that interest hasn't accumulated, and if I go back to my first example, in a reverse mortgage, you might go from 100,000 owing to 107,000 owing by the end of the year. In a very simple example like this, you might be able to still have the exact same 100,000 owing because you chose to make some monthly prepayments. Okay. Now, to the second part of your question, which was, how can you take the money out of the property? Well, there's multiple different ways and combinations as well. So the simplest way is you want $100,000 or $500,000 out of your property. If you qualify, you just tell the bank, I'd like 500 grand dropped into my bank account after the refi. They can do that. Okay, so that's a lump sum. The other is a monthly drip to you, a monthly payment to you. So let's say you're living your life and you find that, what, as much as we have our pensions, we'd like an extra $2,000 a month so that we can travel the world and do the things we want to do. You can set up a monthly drip payment. It feels like another source of income that comes into your household. The third option is a combination of lump sum and drip. And then the fourth option would just be setting it up like a line of credit, right? So you and I, we have lines of credit. Many of our clients have lines of credit. And the best time to set up a line of credit or get access to credit is when you don't need it, right? So for example, an older couple might come to us and say, we'd like a reverse mortgage. We don't need any of it now, but we know that in a year from now, our granddaughter is going to get married and we will want to contribute to that wedding. So we can set up a credit facility now, establish it. They will pay no interest on any of that because it's just like a line of credit. It sits there until you use it. And then in a year from now, when they do need to pay for their grandchild's wedding, they can reach in and grab the portion of it that they need. So we might set them up for 300,000. They might take 20,000 a year from now as a gift to their grandchild. So there are many ways in which people can take money through a reverse mortgage.
Excellent, excellent. Now, moving on, there's a lot of people understand that, hey, there's a reverse mortgage product out there or something like it out there, and for
Yep.
some you brand new knowledge to them. This is excellent. This is why we're doing these types of videos.
Mhm.
I'm curious on how long reverse mortgages have been around in Canada.
Yeah, so over 35 years in Canada, in fact. So they've got a very long history. Um, they've actually also been endorsed by CARP, which is the Canadian Association of Retired Persons, because they've been around that long. You know, anything that could have gone wrong along the way would have come to light. And for them to get that stamp of approval is a big thing. One of the reverse mortgage companies is actually now owned by the Ontario Teachers Pension Plan. So again, that gives it a certain level of credibility, because when those types of pension plans go into ownership of or investment into anything, they also have to look at it from a social aspect and a social net worth adding. They don't want to be involved in controversial things like Exxon type investments, if you know what I mean. So for a big government based pension fund to be investing heavily into a reverse mortgage company lends it a whole level of credibility. And you know, in fact, in the last 3 years, there's been a major uptick in usage of reverse mortgages as well, where we're seeing upwards of 40% increase in the utilization of reverse mortgages in Canada.
Excellent. Okay, so we're going to kind of just pause it here. I got the images. Is this where you want to share your screen now or not yet?
Yeah, so here what you'll do is see that yellow, the next yellow question is part of the popularity because Canadians are living is part of that. What I mean to say by that is part of the reason
Yeah.
that there's a popularity because Canadians are living longer, right? And then we can sort of dive into it.
Okay, perfect. Now,
Okay.
Dean, you mentioned the popularity and the increase in reverse
Mm.
mortgages. And I know one of
Yep.
these, or the stats that you and I track for many real estate related decisions, is the fact that perhaps Canadians are living longer. Yes.
Yeah, most definitely. In fact, I've got a really interesting slide to share with you, Gary. So just let me put that up on screen if I could. And I know it might be hard to see in this small video format, but what you see on the screen there is a blue line. It goes back to the year 1800, and it talks about the life expectancy of Canadians. So just FYI, I'm happy I'm not living in the 1800s, Gary, because basically you and I would be dead right now, because the life expectancy then was under the age of 40. Okay. But as it relates to us and ourselves, as well as the senior citizens in our lives, what's important to note is that on this blue line, if we go back to the year 1975, the life expectancy in Canada was at around 72 years of age. The reason I picked 1975 as a benchmark is because people who are 70 years old today were making their financial plans, starting their careers and making their financial plans back around 1970, 1975. And back then, people were expected to live until the age of 72. Now, retirement age was around the same at 65, meaning that they were really only planning to be retired and alive for 7 years after the end of their working life. So they really didn't have to plan for a very long period of time based on history, right? Now, if you fast forward to today, Gary, what you see is that we have a life expectancy of 82 years plus, which is an additional 10 years, which means after we finish our working life, we could reasonably expect to live for 17 years, right? Not 7, but 17. And so because some of these financial plans were developed many, many years ago when people lived shorter lives, the plans we have in place and the economic provisions people made back then are really not, in line with what's going to let them live happily and the length of life that they want to live today. So kind of a very important number to look at. And 82, Gary, is the number there, the average. I think you and I both know people who are going to well and truly live past that 82 number, maybe 92, maybe 100 plus, right?
Yeah, exactly. No, that's interesting. So you've explained, many reasons why perhaps reverse mortgages would be an option for our aging population. I'd love to get into perhaps some of the other reasons why that might come up as well, because I know there's some other, well, not necessarily outliers, but let's make sure we get enough people understanding the all the options that reverse mortgages and how they can impact you as a borrower
You
and
bet.
parents, right?
Yeah. So let's talk about these reasons. So, number one, people are living longer. We've talked about that. Also, the other thing is you can only get a reverse mortgage if you have equity. And because of the significant meteoric rise that we've experienced in Canada in terms of property value, almost anybody who's owned a property for more than 10 years has significant equity in their home. And so the question is, can you do this in retirement? I mean, if you've owned a property for more than 10 years, and many of our clients have maybe bought 3 or 4 or 5 properties, but rolled the value of the first property into the second, most people who are reaching age 55, 65, 75, they have significant equity. So, firstly, there's significant equity in those properties. Now, that same increase in property value and prices has also been felt in groceries, price of gas, price of property tax, property tax going up 10%. All these things have also creeped up. So the thing is, it's wonderful to have all this equity in your home. But if you've also got expenses which require real cash to pay for these expenses, then this is again why the reverse mortgage has become more popular, because people are saying, look, it's nice to be sitting on $500,000 worth of equity, but it doesn't actually help me live the life I imagined I would be living in retirement, because CPP and OAS, they're just not keeping up. And, the recent reports show that 56% of Canadians don't have a financial plan in place that's going to allow them to live the life they had imagined. That life where, they're going to take vacations, take the cruises, maybe be a snowbird in Florida for 6 months of the year, all the things that they thought they could do. The reality of the situation is they can't with their current income. But with an adjustment, with the addition of a reverse mortgage income stream added, then they're finding that they can actually start to live that life they'd always imagined they would in retirement.
Excellent. Excellent. My mind goes to, as well, both professionals in the real estate industry and helping
Mhm.
clients. And I think the right word here is not helping, but supporting our clients, whether it's on the financing side, like yourself, on my side, whether it's the buying or the selling. I know many people would think, well, if I need access to cash, why don't I just sell my house, Dion, and make
Yeah.
that. Talk to us a little bit about what that looks like from perhaps the reverse mortgage perspective.
Certainly, when a person calls us for a reverse mortgage, before we go into that product, we first figure out what are the other alternatives that you have considered or maybe haven't considered. And one of those things is, of course, just selling and downsizing. And so that's the traditional plan. You sell your $1 million house. Here's the challenge, though. What are you going to buy? And are you going to be comfortable living in that new asset? Right. Also, selling costs. I just did the math with a client recently, Gary, where they would have been selling a property for 1.3 million, and in order to buy a property that they would be comfortable in, they would be buying at about 1 million. So in the face of it, you go, okay, well, they're going to be $300,000 better off. Okay. But we also had to factor in the cost of selling, right? Commissions, etc., as well as the land transfer tax on the property that they would be buying. And when we factored that in, they were basically going to be using about $100,000 of that expected 300,000 in costs. And when we weighed it all up, we said, you know what? Could there be things that we could do to keep you in your home that would keep you comfortable, that would allow you to live there, and still it sort of achieve the same goal that you would have been achieving if you went to live in that condo or that bungalow that would have been the property they would have moved into? And so, in many cases, downsizing is an option, but in a lot of other cases, staying where you are and just modifying that home to suit yourself can also be a better option.
Yeah, that's good. And that's the important math that I think a lot of people, or whether it's other mortgage brokers or even other realtors like myself, we fail to do that math with our clients. And I think it's so important to do that with not only you as a homeowner, but other professionals out there. And that's how we get into supporting our clients the right way. Okay, just before we kind of get into some of the common misconceptions, I do have another question here
Yeah,
on
sure.
how do we, my $1 million home that's paid off as an example, my goal ever since I bought it was to, you know, give that to my kids and so on. How
Right.
does inheritance piece come into all of this?
Okay, so this is an interesting, I guess, phenomenon we've been seeing more recently, where traditionally people pass their wealth to their family when they die, right? And that's dealt with probate and all those other things. Now, what we've seen is people recognizing they're going to live longer, right? So they're not going to pass away at the age of 75. They might be living to 90, and they're recognizing that. And they're seeing that their family is struggling financially now, right? They have a 40-year-old child who has worked very hard, has saved up a down payment for their home, but they can see the economics as such that that child is not going to be able to buy a property and may not be able to buy a property until they transition their wealth to their child, which may be 10, 20 plus years from now. Okay. By then, that child's going to be 65, right? Or 60 years old. So what they're seeing is, you know what? Here's an opportunity for me to help my child now rather than give them $1 million when I pass. I wonder if by giving them 200,000, 300,000 today, is that going to help them? And of course, the short answer is yes. I mean, if you ask yourself, would you rather receive $300,000 at the age of 40 or $1 million at the age of 60? I think we all would take the 300 in the earlier part of our life, because we know that with that, we can go and buy a property, we can go and invest, we can do the things that will well and truly make way more than that million that we would be receiving at the point of death of a family member. And on the flip side, too, the older people who are giving these gifts now actually get to witness the impact of that financial gift, right? They get to see their child and their grandchildren living in a home that they helped them buy, right? And they get to experience that gift. And maybe, the funny thing around that, Gary, is it might also extend their life even further, because, we know that socialization and that family interaction is a big part of what keeps people happy and healthy in retirement. So we're seeing these early inheritances being given more frequently. I work with a lot of financial planners, and it's part of a lot of conversations that we have with them.
Yeah, I love it. And you and I have talked about this too on many of our other videos, in the sense that, perhaps, you're even in your mid 30s and you're having children, and maybe you're living off of one income, and while your spouse is at home with your newborn, or that, that's when we need that assistance the most, I find, or, people that we talk to needs that assistance. So that's
You got it.
a great way to look at it. Okay, let's transition into the misconceptions, and kind of that myth busting, if you will. And there's a lot of misconceptions that come up, and perhaps it's based on, maybe we're not as well educated on the reverse mortgage, and as we've been doing so here in our video, and unleashing some of that information that's important to us. What's some of those things that you wish people knew about reverse mortgages? Let's just we'll start at the
Yeah,
very, then we'll get deep, perhaps.
sure. Look, let me just say that whenever there's a conversation about reverse mortgages, people always have some concerns and a lot of negative sentiment around reverse mortgages. And I 100% understand why people have those feelings. Okay. The first thing I want to say is that a lot of those negative, a lot of the negative news that you will hear about reverse mortgage and the bad stuff that has actually happened has almost always been in the United States of America, right? And I'll tell anybody who's listening, if you were to just Google today the term reverse mortgage, what you'll find is over 41 million websites that relate to reverse mortgages. And my guess is probably over 40 million of them relate specifically to the United States, okay? Now, the thing is, in the United States, as you'll find not just in mortgages, but in many other aspects of business, the regulations are a lot less stringent. Okay. And when regulations are less stringent, that's when people get hurt, unfortunately. A perfect example of that, Gary, is something that we all know that happened in 2008, which was the global financial crisis. And that was really fed by irresponsible regulation in the mortgage industry in the United States of America. Okay. And unfortunately, the same can be said for how they have regulated and rolled out reverse mortgage products in the United States. So, first, let me just say that if you're hearing bad stuff, in almost every instance, it's an example from the USA and doesn't relate to Canada. So, why don't we jump into those questions, Gary? I know
Uh,
you've got a bunch there.
Oh, this is that, and that's really really important. Understanding where your information from is a big
coming from. Yeah.
course. And some of these questions, my friends, it might be more the rapid fire style where there might just be a one word or short answer, but
Yeah.
it's important that we address this because I know, many of you have been thinking about this or talking about this. So the first question, and maybe I don't want to say it's the most important, but it's the one that comes up
Yes.
perhaps the most is, Dion, I just took a reverse mortgage or I want to, will I lose the ownership of my house?
Yeah. So this is the number one question we get. And the answer, I'm happy to say, is when you take a reverse mortgage, no, you do not lose ownership of the property. Okay. The property remains in your name. Your name is clearly on title. No, the bank does not own your property. Okay. The bank does, of course, register a mortgage on the title to your property in the same way that the other bank that you've been dealing with your whole life registered their mortgage on the property. Of course, they're going to be listed as an interested party in the property. But no, the property does belong to you. You remain in control, and your estate remains in control of the property.
There you
Okay.
go. Excellent. Excellent. Okay. The other question that comes up a lot too, and especially as we're talking about reverse mortgages and adding a mortgage, like the reverse means I'm adding principal and principal and principal. Can I end up owing more than my house is actually valued at, in a sense, wiping out any equity that I might have in this house?
Yeah, and you know what? That's a very logical question because the nature of a reverse mortgage means that the balance grows over time. Does it mean that it could reach a point where I owe more than the property is worth? Okay. That's a fair question. I'm happy to say in Canada, the answer is no. In the United States, I can't speak for them, but I know that there have been issues in the United States. But in Canada, reverse mortgages are registered as non recourse loans. What this means is that they can never ask you to repay more than the house is worth. Okay, so there's never been a situation in Canada where you've been in a situation where you have negative equity. Some of these lenders brand this as a no negative equity guarantee. It's really mandated by the government, and the way that these mortgages are set up as non-recourse loans.
Excellent. Excellent.
Okay.
Um, do you want to transition into the model of that? Because that's
Yeah,
the
you know what? So maybe what we could do here, Gary, is you could say, so just say this. So a lot of people, so just
okay.
say something like, to follow up on that, a
Let's
lot of people are worried about not being able to give an inheritance, and then we'll go into that.
okay.
So it's inheritance.
Inheritance piece. Okay.
Yep.
Okay, that's excellent, Dion. And let's kind of visualize this for some of our friends here as we're watching. And as the principal, as you mentioned, grows, I have concerns about the inheritance that I'm going to give
Right.
on state that I'm going to pass on to my heirs. What does that look like?
Yeah. Okay. So let me share this next slide here with you, Gary, where,
That's okay.
okay, just give me 1 second. All right. Can you see that okay?
Yes.
All right. So, yes, the mortgage does grow in value as time goes on with a reverse mortgage. What people forget, though, is that property prices traditionally in a regular market also grow in value. So, what you have on screen there is the 40 plus year history of the market in the Greater Toronto area, as an example. And while we do have ups and downs, you can see that that trajectory is obviously up over year. And I want to give you an example of a case study that we just did with a client. And the question is, will there still be equity in the home in years to come? When I pass, will I still have something in my estate to give to my children as an inheritance? So in this example, we have a property which is worth today at $1.1 million. Okay. Um, Here, I'm going to put up a couple of boxes. This shows the interest rate. Now, this can change over time, guys, but we're using current rates at the time of shooting this video. And we're showing the balance owing in the very first day you take this mortgage. You're taking a reverse mortgage here of $100,000 on a property worth 1.1 million. And so the summary is we've got an interest rate, we've got a balance on the mortgage of 100K, we've got a home worth 1.1 million. Therefore, the equity that we have in the property is $1 million even. Okay. Now, I want to show you what happens in year number 2. Okay. In year number 2, what you will see is that the balance of the mortgage has now increased to 106,854. So let's call it nearly 107,000. So the mortgage has grown in value by 107,000. Okay. At the same time, the home has increased in value from 1.1 million to 1.155. So it's grown by $55,000 in value. And this is assuming a 5% growth rate, which is lower than the 50-year GTA average. Okay, so we're assuming conservative numbers here. So what that means is at the end of the year, the mortgage has grown, but the house value has grown. And so the home equity is up here by $48,000 at the end of year number one. So we're actually still progressing in the personal net worth of this homeowner by $48,000 even in that very first year. And I want to also point out, so we started with a net worth of $1 million. What does this look like, say, 15 years from now? So that's the very bottom row here. 15 years from now, yes, the mortgage has grown to 278,000, but the home equity, which 15 years earlier was $1 million, is now at just over $2 million in equity. So Gary, I hope this sort of demonstrates that by taking a reverse mortgage, it doesn't mean that you're automatically going to be eating into the equity in your home. In fact, it can grow over time and increase over time. Okay. And this is, I'll just show you a couple more slides here, Gary, that demonstrate this a different way. It shows here again, that growth. And what you'll see here is that it's showing it like a pie chart where, maybe that black and gray section, which is the mortgage portion, is getting larger and larger. What it fails to show, though, is the size of that pie. The circle should also be growing as well. So this next slide shows it better, where you see that yellow bars are the increase in equity over time. And this final slide here shows you, that final year number where, yes, at the bottom, you've got your principal and interest, which has grown. But at the top there, you've got $1.4 million in equity remaining at that time. So that's a 15-year number. So yeah, hopefully that puts some people's minds at ease that, a reverse mortgage does not mean that you're going to leave nothing for your heirs, right? All going well with regular growing of assets, we're still going to be in a very strong position.
That's actually, for visual learners like myself, that's where I learn the best. And
right.
It's important to have these conversations and ask these questions so you can see what that end result is going to look like. Okay. The other kind of hot question, especially as we're perhaps reading the wrong information on the websites come from the US, or my neighbor told me this and I heard this horror story, in a sense, that reverse mortgages are really as a last resort, maybe for the desperate type of homeowner or that sort of thing. And maybe that's the wrong word to use, but talk to us about that a little bit.
So reverse mortgages can be used in those emergency situations, but in many situations, we're seeing them used as a very sort of sophisticated financial planning tool. Okay, so first, let's address those sort of people who might be in a more imperfect financial situation. Okay, so I want you to imagine we've got an older couple in their 70s. Things have been going well, but maybe they had a medical issue and they have a regular mortgage with a regular bank, the green bank, the blue bank, whatever bank. Okay. And for whatever reason, they're going to have trouble making their next couple of mortgage payments. It's just not going to be possible. Okay. A traditional bank will give you a little bit of leeway, but there will come a time when they say, look, you have to make good on this loan, or we have to start the foreclosure process. Okay. This is a reality, right? And so the interesting thing there is a reverse mortgage can potentially stop a foreclosure on a property, because a reverse mortgage does not require you to make a payment, right? It will simply require you to have sufficient equity in the home. So while a reverse mortgage can be used for people who are in sort of more dire or imperfect financial circumstances, it can also be used, as I said earlier, for a more sophisticated financial planning setup. So let me give you an example of that. So we're seeing financial planners recommend reverse mortgages as part of a financial plan. I'll give you a great example. We've got some clients who have a very good stock portfolio and they needed some cash. Now, they could have sold some of their stock portfolio, But in doing so, they trigger our old good friend, the capital gains tax, right? And when their financial planner did the numbers, what they determined is the capital gains tax that they would pay would be a certain number, and taking a reverse mortgage would result in less expense to the client over the next 10 years. Also, they get to hold on to the asset, that stock portfolio, which will grow and compound and give dividends for years to come. And so it's being used by strategic financial planners, seeing, okay, this is just another tool with which we can get our clients to their financial goals and make sure that their estate remains intact, right? By holding on to that asset and maybe just taking good debt in this example to help them move towards their goal.
Yeah, that's well said. Good stuff. Okay. That kind of leads me to the next question too, is in some cases where, finances, perhaps you found yourself in difficulty or financially and there's other things happening. Can a reverse mortgage, can that lender or that company force me to sell my property as well?
Okay, again, this is a very common question. Can the lender force me to sell my property? So the good news here is that no, not in Canada. Okay, and I'm going to give you an example of why this has been in the news, and it's been in the news again in the United States of America. Okay, so in the USA, I want you to imagine you have a person aged 65. Let's call him a man who's married a lady who's aged 52. Okay. So, not an uncommon situation. We've got a wife who's younger than their husband. Now, in the United States, that man can qualify for a reverse mortgage, right? And even though his spouse is under the age where she'd be able to qualify, because he qualifies, he will get funded that mortgage. Okay. Now, in the unfortunate event that he was to pass away, what now happens is she, who's the surviving spouse, she doesn't qualify for that reverse mortgage because she's not of age to qualify for that reverse mortgage. So the situations that I've read about and seen where people have been forced to sell their home is like this situation where this woman, because she doesn't qualify for the product, is forced to sell that property. Now, this will never happen in Canada, and I'll tell you why. Both spouses, everybody on title, must be of age, meaning they would have not qualified for a reverse mortgage because she was too young to qualify for that reverse mortgage, right? So in Canada, as long as both of you are of age, 55 plus, and you qualify for the mortgage, in the event of a death, the surviving partner will never have to pay out that mortgage because they qualified for that mortgage together with their late partner.
That's excellent. That's excellent.
Okay.
And we still have our monthly costs, as it were. We still have our property insurance that we have to have, yes, and we still have
Correct.
our property tax. So that doesn't go away with a reverse mortgage, correct?
Yeah, let's be clear. I mean, that's with any mortgage, not just reverse mortgages. Any mortgage you take will require you to maintain your property tax payments, maintain your property insurance. In the event that you don't pay those things, of course, any lender is going to be concerned. But if you're a reasonable person, responsible person, then that's not going to be a worry.
Excellent, good stuff. Okay, moving on. Now, Dion, my neighbor around the corner tells me reverse mortgages are so expensive. You have to pay all these extra fees, 2%,
Yes.
this, that.
Yes.
Shed some light.
Okay. All right. So is there a 2% fee on reverse mortgages in Canada? No. Okay. Is it the case in the United States? Yes. Again, so more information from our southern neighbors, which makes people in Canada feel like, okay, this applies to them. It is not the case. So in Canada, there are usually some fees, but those fees can be as low as $995, so less than $1,000 to set it up. In fact, right now, as I speak to you, there's a promotion at one of these lenders where they're totally waiving that fee. Okay, so there's no extraordinarily high fees that are associated with reverse mortgages. You will always have to engage a lawyer. You will, of course, need to also have an appraisal done on the property as part of the process. But again, these are all standard things that you would normally do when getting any mortgage in Canada. Right.
Stuff. Now, I receive a pension. I
Mm-hmm.
have EP. Maybe I worked wherever and I have this nice
Yep.
long-term pension. Will the reverse mortgage affect any sort of pension that I might be receiving from any source?
Yep. So this question, one of the top 5 questions, will getting a reverse mortgage impact my pensions in any way? Again, the good news is the answer is no. Okay. If you're getting government pensions, CPP, OAS, if you're getting a company pension, or maybe you were a nurse or a teacher, or you're getting police pension, none of those things are impacted by you getting a reverse mortgage. And the thing, and I can understand the confusion around it, Gary, because if you choose to set up your reverse mortgage as a monthly payment to yourself, $1,000, $2,000 a month, I understand that it feels like income because it's like just one more paycheck that you're receiving every month. But the reality is, it is not income. It's actually a loan. You're taking this loan from a lender, and they just happen to be paying it to you in what looks like the form of income, right? But it is not income. So no, it will not impact your government pensions or your company pensions.
Dion, you alluded to this briefly a few moments
Mm.
ago. Is there more than one company? Is there other companies or lenders that provide reverse mortgages?
Yeah, so the short answer is yes. So that's just up until a couple of years ago. There really was only one company in Canada. I think most Canadians who know about reverse mortgages probably know this company. They're called Home Equity Bank, and the product that they rolled out to the Canadian public is the CHIP reverse mortgage. So you might see TV ads around this, or ads on the internet around the CHIP reverse mortgage product, and it is a great product. But the good news is that there are now other lenders, some of whom are Schedule 1 banks, just like Home Equity Bank, who now offer these products. And what that means is, with competition comes usually a bit of sharpening in terms of rates and fees. And we're already seeing that in the market right now, where because it's no longer one company and we have some competition, Canadian consumers are the beneficiaries of that competition with better pricing.
Well said. Okay, now let's kind of transition into uh, reverse mortgages are a great option for homeowners or our parents or whomever aging in place. What does that mean, Gary?
Right.
Aging in place simply means I choose to live in this home much longer than perhaps the older generation did, where they would move
Mm.
in retirement community. Uh, we
Yes,
are aging in place in our homes much longer, and maybe
correct.
making some renovations, as it were, as that goes on. How does that help that type of borrower?
Okay. So 93% of Canadians surveyed about whether they want to stay in their home or whether they want to move out when they're older and move into an aged care facility. 93% of Canadians want to stay in their home. I think that just makes sense. It's familiar, it's what they know. They don't necessarily want to change their entire environment in their 70s or 80s or whatever that age might be. Okay. But the thing is, sometimes the home that they live in is not equipped based on their needs as they age, their physical needs as they age. And so, what people are using reverse mortgages for in some instances is they're using it to basically make some modifications to their home that will allow them to live in their home more comfortably. Okay, so a couple of quick examples would be the installation of a chairlift if you live in a home with stairs, or the addition of a ramp to your front steps. It could also be widening of doorways if people have mobility issues or need space for walkers. Also, sort of grip handles in the showers, those types of things. So, all of those things are what I've seen people take reverse mortgages for. The other thing, too, Gary, is in home care, personal support work, right? So, you could go and live at a facility. And I know you and I have looked at these numbers where to live at a decent facility costs you anywhere from $4,000 to $10,000 a month. Okay, if instead of that you could pay a personal support worker to come to your home a couple of days a week to assist you in your older years, then you might end up economically being in a much better situation as well, and being in an environment which you're happy to remain in because it's the familiar environment. So all of these things can be paid for with a reverse mortgage.
Great points. Great points. Okay, I'm on board, Dion. I like everything that I'm hearing. This sounds like a great option for a family member, for me perhaps. Uh, let's talk about the eligibility, or perhaps the how do we qualify for this type of service or package.
Sure. So not everybody qualifies, and it's very much age based. Okay. So the age in Canada is you need to be a minimum 55 years old. Okay. You also can only take this on your primary residence. So you can't take it on your vacation home or a rental property. Okay. And if you happen to have an existing mortgage on your principal residence, let's just say you have a $50,000 mortgage and you'd like a $100,000 cash out. So from a reverse mortgage company, that reverse mortgage company would lend you 150,000 to pay out your first mortgage, and you would have that additional $100,000 lump sum on top. So they're the technicalities of eligibility. Of course, there'll be an appraisal on the property. Okay, so the property would have to be assessed in value. The property must be maintained to a livable standard. So just be aware of that as well. The asset does come into play.
Oh, that's good, because one of my questions was, exactly along that appraisal. Who sets that appraisal value? Well, that's a professional appraiser that's chosen or selected by the lender, correct?
Correct. And you know what? A concern that comes up there is, oh, Dion, when is the appraiser going to come to my property, and are they just going to show up? And it's a fair question, but I just want people to know that you are in 100% control of when the appraiser comes. I know some people want to maybe paint a room before the appraisal comes. Those little things can be done if you really want them. The reality is that a lot of people have so much equity in the home that the painting of that extra room really won't have a material impact on the amount of money they can borrow as well. So people shouldn't be too worried about that.
Yeah, it's sometimes somewhat of a different mindset or slightly different. We're not doing that extra work to get the home sold, whereas typically we would, right? Painting a room
Mm.
type of thing. This is strictly for the valuation of what the bank deems to be a fair number for them and for you. Okay, moving on. Speaking of properties, Dion, um,
Mm.
what type of properties? Because we have to qualify as an individual, but so does the property in a sense. So let's shed some light on that, Dion. What type of property qualifies?
Yeah, so in terms of the type of property, it's pretty much all properties that most regular Canadians will live in, which are your homes, your townhomes, your detached homes, as well as condominiums. Um, Properties on leasehold land and mobile homes do not qualify for this. So you must own the property or be in a condo type structure.
Good. Okay. You mentioned this as we've been talking along here, your principal residence. So this is kind of a two-part question is, hey, let's just clarify what a principal residence is. And then, Dion, I've had dreams of buying a second home, maybe a little
Mm.
cottage up north or wherever you're, or down south. I want to be a
Yeah.
snow. Can we use the funds or reverse mortgage for that? So principal residence, what is it? And can I buy a second property?
Sure. So correct. So reverse mortgages can only be taken on principal residence. That is the primary home in which you reside most of your year. Okay. So for most of you, that'll be your family home that you raised your family in. Now, the question of can I use a reverse mortgage to buy a cottage or a vacation home in Florida? Okay. So the short answer is you can't do it directly, but indirectly you can. So let me give you an example. Let's say you own a property and the value of that property, say $1.5 million. And you want to buy a property in Florida for 500,000 Canadian dollars. So what we can do is we can secure that $500,000 against your Canadian principal residence. That cash will be dropped into your bank account, and then you can use that $500,000 cash to go off and buy that Florida property, uh, effectively cash. Yes, there is a mortgage, but that mortgage exists on your Canadian property, not on the Florida based property.
Very good. Okay. Financial cost.
Mm-hmm.
And there's many factors in here, and a lot of us obviously, if we're looking at a reverse mortgage, it typically means we've held a home for 25 plus 30, 40, 50 years even.
Maybe.
We've had probably a mortgage or two along that way, and we understand
Yes.
cost to it and things like that. How much? I want to know a couple of things here. And if you've used the $100,000 as an example
Yeah.
throughout,
Simple example.
yeah. Well, what's the maximum amount that one can borrow from a reverse mortgage?
Yeah. So the maximum is, well, it's traditionally been 55%. Some lenders have made allowances for a little bit more than that, but for the purpose of today's conversation, let's just call it 55%. So if you own a home, it's worth $1 million, and you have zero mortgage on it. We could likely get you a mortgage of around 550,000, as long as your age allows for it. So this is interesting, Gary. When it comes to reverse mortgages, the older you are, the more of the equity in your home you are allowed to access. Okay, so put simply, if you are at the first year at which you qualify, which is at age 55, the maximum that you would be allowed to withdraw would be 15% or 150 grand in that example. Whereas if you were 80 years old, you'd actually be allowed to access the maximum number, 55% or $550,000 in this example. So age does play a factor. The older you are, the more you can access.
Interesting. And Deanna, I have a question here as well. With that said, let's say I choose to take a reverse mortgage at age 60, and we'll use your $100,000 example. At age 70, can I borrow more? Can I reapply and borrow more money? Should I require?
That's a great question. And yes, the answer is yes. Okay. Because now you've met a new age threshold. And these reverse mortgages are usually in a 5-year term. So if at age 65, you take a 5-year term, you reach the end of your term, you can talk to the reverse mortgage company about the fact that, hey, I'm now older and I'd like to now access a little bit more equity. That is possible, yes.
Okay, good stuff. Circling back to our costs, we talked about the loan to value, if you will, on what we can borrow appropriate to our age in a sense, and the equity there. Talk to us about the cost of it. Simply, we learned earlier in the video here that there's sometimes a cost of approximately $1,000 to $1,900. Are there any hidden costs?
Yeah, so really, we've got legal fees, which again, standard. They're going to range for maybe $1,000, $2,000, something in that range. Appraisal costs usually run you somewhere a couple of $100, depending on the size of your home, the location of your home. And just keep in mind that the legal costs and the application fee that we mentioned, it can actually all be rolled in. So meaning that you very rarely have to reach into your pocket. The one thing that you would actually potentially pay for is the appraisal, but that's probably the smallest cost of a few $100s. Whereas, say, the lawyer's fees, the potential lender establishment fees can all be just taken off the money that is funded to you. So there's very little out of pocket in that regard.
All right, good stuff. Earlier in our video, we talked about the estate and the heir and passing money on, and what does that look like? I'd love to get some clarity on how, really, in a sense, how does a reverse mortgage affect a homeowner's estate?
Yeah, that's a very good question. So, as part of the conversations that we have with some of our senior clients, we do involve their children, right? Sometimes they want them deeply involved because they have an interest as to, okay, we want the best for our parents, but how does this impact their net worth and therefore the inheritance that may come down the line? And in some instances, we'll say to the children, look, if you have the ability to assist your parents with the $2,000 a month that they feel they need to live a good life, then in some instances, the children sort of band together and they'll actually help the parents with that expense without having to take on a reverse mortgage, right? So that's one approach. But there are many instances where they say, you know what, no, we understand this is best for our parents, and we're not in a financial situation where we can help them with that couple of thousand a month. So they just want to know what's going to happen at the end of this, right? And so we can show them those projections, which we showed earlier, Gary, where, as much as there will be a reverse mortgage and it will grow in value, as long as the property reasonably grows in value based on historical trends, they're going to be fine. So I can understand how this is sometimes a decision that is beyond just our clients. It is their family, their children, their grandchildren, and many people are making these decisions not just for themselves, but for the people behind them. And I know that it's sometimes a strange thing because it brings up the conversation of our mortality and the idea that we're all going to pass one day. But I find that it's probably better to have these conversations early in the piece, because I think you and I both know and have experienced, unfortunately, people who have, when the will has to be settled and the estate needs to be divided, oftentimes it can cause issues with the surviving family members as to who gets what. I think sometimes it's better to have those conversations early in a stable and a less stressful time of life, right? So this sometimes prompts those really good conversations as well.
Of course, of course. And moving on, we've answered this throughout our video as well, but I asked the question very specifically for that very specific question, or
Sure.
excuse me, is what happens when the loan balance exceeds that home value?
Okay. So again, in Canada, that if that was to happen, if something dramatic was to happen where the value of your home dropped by 50%, and so you owed 550 grand, but your home is now only worth $500,000, the good news is in Canada, they're not coming for the difference. Okay. Because it's a non-recourse loan, the government or the bank will not be allowed to come for more than what they could sell your property for, or that you could sell your property for, rather. Because remember, you still maintain ownership and control of that asset.
Perfect. Well said. We wanted to ask the question very clearly, so we got that
No,
clear.
no, it's good.
Yeah. Yeah. Okay. There's other products out there in the world, Dion,
Yep.
for getting money and using that money and using it wisely, obviously. And sometimes we use reverse mortgage versus this versus that. And instead of using the word verse, I like to use the word or. Should I look at a reverse mortgage or perhaps a home equity line of credit or a traditional mortgage? Let's kind of break that down a little bit. How does a reverse mortgage compare to a home equity line of credit?
Okay, great. So I look at a home equity line of credit for seniors in the same way that I look at these reverse mortgages, almost like an insurance policy. Okay. And what I mean by that is we can go and get a $100,000, $200,000 home equity line of credit, or HELOC. And we can establish that today. And a lot of my older clients say, you know what, I'm probably never going to need it, but I just want to have it there in the event that something happens and I need to grab some money quickly, right? So a lot of people use HELOCs for that purpose. The challenge with a HELOC, number one, you have to qualify for it based on your income. So they don't just look at the equity, but they look at how much income you make and does your monthly income allow for you to make payments on that HELOC in the event that you use the HELOC. Okay. With a reverse mortgage, there's no significant income qualifying. Okay. So many people who don't qualify for a HELOC will qualify for a reverse mortgage. Okay. Also, sometimes there are credit requirements with major banks, whereas maybe you've had a hiccup on a credit card or a car payment, and they're going to be very concerned about lending you money. We found that reverse mortgage lenders are a little bit more forgiving, especially when they know that by lending you this money, they're putting you into a position where you should never have to have those issues pop up with your credit card, with your car payment ever again, right? Because they're setting you up to that level. And so, these are the other, you could also look at just getting a regular mortgage, right? But again, you have to qualify based on income, qualify based on credit. So it's really an ability of income which finds people leading to reverse mortgages rather than your traditional plans.
Okay, our next question, in with the same line of thought, we've got our
Yep.
first mortgage, we've got our home equity line of credits. Are there any other options for seniors to look at?
Well, we talked about selling and downsizing and the costs associated with that. So that would be one logical path. The other one, which I've seen a little bit more recently, is people actually renting out a portion of their home. So they've got their 5-bedroom home, which served them and their family when they had kids, but the kids are long gone. And I've seen people rent out rooms to university students or even regular working people. And room by room rental is getting premium dollars at the moment, so that's a possibility. The thing there, of course, is you're dealing with different personalities, and the idea of sharing your space with a potential stranger or a tenant, it may not be attractive for some people. I know for some people that might like the social aspect of that, but others like their privacy and probably wouldn't do that. So you could downsize, you could rent out space, or you could get your reverse mortgage.
Good stuff. Okay, let's move along a little bit and talk about how are the borrowers for reverse mortgages protected? Like what protects them from all these outside influences and things like that? So let's talk about that from the borrower's perspective.
Sure. So reverse mortgages are governed and regulated by the same body that regulates your regular banks and your regular mortgages. So that is the Office of the Superintendent of Financial Institutions, so OSFI, right? And so they have very strict lending standards and consumer protections in place, just like the bank that you've banked with for many years. Now, remember, this mortgage is a non-recourse loan, meaning you can never owe more than the value of the property. So you'll have this no negative equity guarantee. And in terms of protection and ensuring that you understand the contract that you're entering into, you must receive independent third-party legal advice before signing any agreements with a lender. Okay. So if you've been using a lawyer for the last 30 years of your life, then we'd always say, let's go and talk to that lawyer and show them the documents that you're going to be signing for this reverse mortgage, so that they understand it and you understand, the implications of what you're going into. And as I said earlier, I mean, it's very similar to a regular mortgage contract, but the reverse component being the balance grows, and instead of you paying the bank pays you.
Dion, this again, I'm on board. I like it, but I want some evidence, Dion. I want to
Sure.
know, people that like to hear the stories of
Yep.
maybe one of your clients that you've helped, perhaps in a successful environment on reverse mortgage makes absolute 100% for you as the borrower. Talk to us about how you helped one of your clients in this regard.
Okay. So recently helped an older gentleman who ran a business. He had been running this business for many, many years, and he had a mortgage on his principal residence. And his entire life, his plan was that when he sold the business, he would take the proceeds of that business and then he would pay off his mortgage and he would be mortgage free. Okay. Some things happened inside that business with suppliers and contractors, which basically meant the business wasn't saleable anymore. So this plan that he had literally been working towards for 30 years, ultimately in a matter of a couple of weeks, unfortunately, it fell apart for him. Okay. And so he now had to face the reality of him in his senior years with this mortgage of $500,000 on this home that he'd purchased 30, 40 years ago. And when we looked at all of the options that were available to him, as much as he could have potentially qualified for a regular mortgage, it made absolute sense for him to take a reverse mortgage. So in his situation, he's now effectively living the life he thought he would be living. He got there a different way, he used a different vehicle, right? Which is he didn't pay it off by selling the business because of those unfortunate events. But he managed to set himself up with a situation where he doesn't have that $4,000, $5,000 a month payment, right, anymore. So that's an example of somebody who had a plan. The plan didn't work, and this was, I guess, a plan B, and he's very, very thankful that we have this plan B in place. Okay. I'll give you another example, Gary, of where we happened to set up a situation where we helped multiple generations. Okay, so what we have is we have an older couple living in and around the GTA, and they have a daughter and her husband who were ready now to stop renting because they'd been renting for many years and buy their first home. Okay, the daughter had children and was about to enter the workforce again, so they were going to get double incomes, and they had a little bit of savings behind them, so they were getting ready to buy. The challenge is, because of where price points are now, the place that they could buy would be about an hour and a half away from where the grandparents are. Okay, and so when we looked at the overall situation, we said, okay, is there a way that we could use a reverse mortgage on the older generation's home to gift the children an extra $200,000, which would then allow them to live in a location that would be close enough to the grandparents, right? So that they could then enjoy that sort of family dynamic. And that's basically what happened there. So again, this whole living inheritance, early inheritance idea, where now, who are the beneficiaries? Well, the beneficiaries in my mind are three generations of people here. We've got obviously the grandparents being able to spend time with their grandchildren and children. We've got the children living closer to where they work, therefore you can imagine the positive impact on their lifestyle with not having to commute an hour plus 2 hours a day, right? And then, of course, you've got the grandchildren who get the benefit of seeing this sort of family dynamic and growing up close to their family, close to their grandparents. So that was, I call that like a triple win there, where everybody was able to benefit, right?
Well, I love it.
And
And I'm going to say
yeah,
it's an amazing example of that living inheritance and being able to enjoy it as one big family unit, as it were, right? Yeah.
correct, correct. And I've got one more example where a similar situation where it was used on a purchase. So we have an example where we've got clients who live in Hamilton, but all of their children and grandchildren are in Mississauga and Toronto area. Okay, and so they would love to be closer to their family, but they know that if they sell their Hamilton property, the type of property they need to buy in the GTA is going to cost them about 300,000 more. And the idea of going and buying a property that means that they're going to have a monthly payment of $1,700, $1,800 a month, it's not what they want, and they feel stuck. They feel stuck in Hamilton. They're like, well, we'd like to move, but we can't, right? So what a reverse mortgage can do here is they can sell their property in Hamilton. They can buy this property, which in the GTA, which requires a $300,000 mortgage, but we can arrange that mortgage as a reverse mortgage, meaning they can move to that GTA property, not have that monthly payment, and be closer to the location, the family that they want to be close to. So, an example of a reverse mortgage being used on a purchase there.
I love it. I love these
Mhm.
stories. Okay, let's move on to the part where it's a fact of life where partners, spouses decide to go their separate ways a long
Mm.
time, and reverse mortgage. How does it affect perhaps this? This is a new term to me. The gray divorce, or the seniors are
Right.
divorced, parents are divorced, and we've all heard that before. We all know someone that's gone through that and they lived through that. Uh, but the financial piece is always a big component of any separation. How does a reverse mortgage affect this scenario?
Yeah. So, guys, yeah, divorce is unfortunately a reality of life. People change and they need to move on with their own lives. And what we're seeing, and you might have been hearing or reading about this in the news, is that a lot of couples might have issues in their relationship, but they generally, many of them stay together for the sake of their children, right? So that until the children have graduated, maybe even graduated university, this couple will live together. But when their children are off and have their careers established, we're seeing people decide, okay, look, we've stayed together in a less than perfect relationship for long enough now, and now we're in our 50s, 60s, 70s, and now it's time for us to part ways, right? And so I'll give you an example here, Gary, where we've got a scenario where we've got a family home worth around 1.5 million. And because there's other assets involved in separation, stocks and stuff that need to be separated, we have a situation where we have a woman who wants to continue living in the home, but the husband who's going to be leaving is owed around $400,000. So that effectively she needs to give him $400,000 so that he can go off and buy his own property. And based on her income, solo income, and now a pensioner, there's no way she's going to qualify for a $400,000 mortgage with a major bank. So what we can do here is take that $400,000 reverse mortgage on her property. It means that she gets the money she needs to give to her ex-partner, and she has no mortgage payment, which means she can continue to live there comfortably. He now gets his $400,000 lump sum. I know the next question will be, well, what can he buy for 400,000? And I think the answer is really nothing, unfortunately, in the GTA. And so he might be off to buy something in the range of say 700,000. And again, he's now on a single income. So how does he qualify for that difference of 300 grand that he needs? Well, he can then buy that property, be it a condominium. He can get that $300,000 in the form of a reverse mortgage, again with no payment and no significant income qualifying. So yes, it does help in this less than perfect outcome for this relationship, but at least financially, you can set these people up so they can continue to live financially independently.
Well, that ties into perhaps one of my last questions here, Dion,
Sure.
as we wrap this up is. you know, that example or any of the examples that you've chosen to use today, what does that process look like? Is there paperwork involved? What do I have to give to the lender, to you, the mortgage broker? What do I have to prepare? What does that look like?
Yeah. So I know that doing paperwork, especially financial paperwork, it just feels like pulling teeth. I get it. But I'm happy to say that the reverse mortgage application process is potentially surprisingly simple for a lot of people, right? So it'll be standard intake of your personal information, your name, your date of birth, your address, those types of things. The thing that is less onerous with reverse mortgages is the income documentation component, right? So you might have been involved in a mortgage process earlier in life where you had to provide pay stubs, T4s, T1 general tax returns, notice of assessments. You might have needed to provide 10 or 20 income documents, right? In the case of reverse mortgages, it's very much simple in that just give us a copy of your pension statements. And in most cases, that's going to be sufficient for a bank to qualify the income component of the factor there. And just keep in mind, they're not actually looking for your ability to make the payment on the mortgage. They're looking for your ability to just maintain property tax payments and insurance payments, right? So that's all they really need to see and why they need to see your income documents. You'll need to meet with a lawyer. And I know recently we had an elderly couple who a concern was just their mobility wasn't there and they just didn't want to have to go to a lawyer's office. And today, with the technology we have, depending on what you would like, you can actually do your meeting with your lawyer over like a Zoom video conference, like what we're seeing here. That's become a very acceptable practice now. So closing of mortgages, which used to require physically going to an office and sitting in a waiting room, that's no longer mandatory in many cases. And in terms of time frames, I know, and this is not just with reverse mortgages, but mortgages in general, clients come to me having tried to work with their bank or directly with an institution literally for 6 or 8 weeks without getting any headway, right? They're waiting on people to get back to them. Um, Generally speaking, with us, the minute that you say, Dion, let's do this, to the day that we actually close a mortgage is usually around 30 days, if that's the time frame you want. And in fact, we had a bit of a situation recently where clients really needed to get their mortgage closed within 20 days, and we did manage to do that as well. So that time frame can be sped up as well. And our job is to really just knock over all the roadblocks and deal with the red tape for you. Because putting together documents is never fun, but that's what we specialize in. That's why we're here to help you.
That's amazing. I love it. Dion, over the course of our webinar here, our video, we've gone deep into reverse mortgages, but if we can just kind of sum up perhaps what you'd want people to know about reverse mortgages in just a few sentences. So when they are talking to their family member or their neighbor, they're providing valuable information as opposed to some of the horror stories we've heard in the past.
Yeah, definitely. So, like with any financial instrument or debt product, is it a product that is going to serve your life? And is it going to be able to get you the results that you want for your income, for your net worth, for the inheritance that you plan to leave for your children? And if done properly with proper consultation with mortgage professionals like ourselves, we'll be able to answer all of those questions for the borrower, for their family, so that everybody can see that, okay, if we do choose to go down this path, that this would likely be the outcome. And again, what most people will find is all the concerns or the negative news that they've heard around reverse mortgages is in fact not true only in the United States of America. And it is clarity around those misconceptions which give people the peace of mind to move forward. Like nobody's going to move forward to make a big decision, a big financial decision, unless they're crystal clear on what happens in events A, B, C, and D. And we need to answer all of those questions for all parties first. Then we can move forward. And you know what? At the end of the conversation, it might be a reverse mortgage that's good for you, or it might be a traditional mortgage or a traditional home equity line of credit, depending on where all the numbers land. So really, it's all these options should be on the table, and then you can make the best decision for you.
My friends, this has been exceptional. See, one thing I've learned in life, and perhaps you have as well, my friends, is you start understanding and asking the right questions you're going to get the right answers. And that's certainly what we tried to do here today. Dion, remind us how to get a hold of you.
Yeah, so you can reach me at kangamortgage.ca or on Instagram at the Dion Beg.
Very good, my friends. That's Dion Begg. I'm Gary McGowan. We'll see everybody in the next video. Goodbye for now.